Um, Thank you, Mr. Nguyễn Ngọc Bách, and thank you, Mr. Manari. Ladies and gentlemen, we are very happy to have great speakers each year. And last year, we had Ms. Trúc Nguyễn, CFO of HSBC Vietnam. And this year, she brings us the big surprise, the great honor to have the CEO of HSBC Vietnam here. And we are about to see him right now on this stage. By person, by human, real. Please welcome, let's put your hands together to welcome Mr. Tim Evans, CEO of HSBC Vietnam, who will speak on the keynote for the first keynote, Economic Updates from Crisis to Recovery. Mr. Tim Evans.
Thank you very much for the warm welcome. One thing I have learned is that it's always very good to do as your CFO tells you. So when Trúc said, I would like you to attend, I had to immediately say yes. But following in your footsteps this year, Trúc, I will hopefully do a reasonable job. So hold on, where do I point this clicker to change the slides? Do I point it over there? Okay, perfect. So hello, everybody, and on Zoom, hopefully you can hear me clearly and you can also see the slides. So when I was asked to do this talk on the Vietnamese economy and how we see things developing over the next 12 to 18 months, I decided to call it Snapping Back. Because my strong belief is that as we get past the worst of the crisis, that the Vietnamese economy will bounce back, and it'll bounce back strongly back to its pre-COVID performance. So I just want to start by, first of all, introducing myself. And there's a reason to this. This is very important because there's an economic lesson here. So my name's Tim Evans. I joined HSBC in 1995, just as the dot-com crisis started. I moved to Thailand, and in 1997, on the 2nd of July, I was there when the Asian currency crisis started in Thailand. I moved from there to Hong Kong. And after that, I went to Iran, and as soon as I arrived in Iran, the US invaded Iraq, and the Iranian economy went into free fall. I moved from there to Paris, where I ran our corporate business, and the French public services went on their biggest and longest strike ever, which pushed the French economy into recession. From there, I moved to California, and I was in California when the housing crisis started, which led to the global financial crisis. And then from there, I moved to Dubai, and within a week of arriving in Dubai, the Dubai world went into bankruptcy, and Dubai had to be bailed out by Abu Dhabi. From there, I moved to Hong Kong, and when I was in Hong Kong, the protest movement started, which meant tourism into Hong Kong fell, and the economy went into free fall. So when I arrived in Vietnam in October 2019 and I met the State Bank of Vietnam, I told them this story, and Mr. Ha, who's now Deputy Governor, said, there is nothing you can do to derail the Vietnamese economic story. I spoke to him 2 weeks ago to congratulate him on being Deputy Governor, and he said, I remember that conversation we had. This crisis is because of you. So, if you remember one thing from my presentation today, please pay very close attention to wherever I move next. Short sell the sovereign debt of that country, and you will become very wealthy. So that's a little bit of background to me. I also have a disclosure. I am not a world-famous economist. I am talking about the economy, but I am not an economist, certainly not Dr. Nouriel Roubini. I'm also not a politician, certainly not one that wears a red tie in the United States. I am a simple banker. So the views that I will now present to you are based on listening to my CFO and speaking to my customers. So let's just look at Vietnam and how the economy has performed, and we'll just go back a little bit in time. So in 2020, you may recall, it seems like a long time ago, but at the start of 2020, everything was looking positive and rosy for Vietnam. HSBC forecast 7.1% GDP growth, one of the fastest GDP growths in Asia. And then suddenly, around the end of January, we heard of COVID. And this is very interesting because I was at a VBF meeting in Hanoi on the 18th of January, and we had lunch with the Minister of MPI. And someone in the room asked him a question and said, what is the biggest risk to Vietnam's economy? And having been here 2 months or 3 months, I thought he may say infrastructure, I thought he may say competition, and he said, the biggest risk is what's happening in Wuhan. And I remember thinking, really? There's a flu in Wuhan. How can that possibly have an impact on the economy of Vietnam? But clearly, the Vietnamese authorities had interpreted what was happening there. And to be fair, in 2020, as a foreigner living in Vietnam, I thought Vietnam did a phenomenal job in ensuring that the economy continued to perform. So COVID came along in January 2020, and we saw here in Vietnam a drop in economic activity. And many of you will recall we went into a short lockdown period for about 6 or 7 weeks, which saw a drop in economic activity. But the government did a very good job of closing international borders early on. And so we saw a precipitous drop in tourist arrivals. Tourism used to be around 13, 14, 15% of the Vietnamese economy. They had 18 million tourist arrivals in 2019. The forecast was 20 million in 2020, and it was going to generate around $35 billion of revenue. So a material part of the Vietnamese economy and the growth story of Vietnam was tourism. This is what Tan Son Nhat Airport looked like in 2020. When I first arrived here in Vietnam, it used to take 45 minutes just to get through immigration. So in 2020, Vietnam achieved 2.9% GDP growth, one of only 3 countries in Asia to show positive GDP growth. So a phenomenal performance. And the Vietnamese were rightfully happy and proud of what had been achieved in a very, very difficult environment. Fast forward to 2021, and there was a lot of optimism. Year of the rat was behind us. It was now the year of the ox, big, stable, hardworking. A vaccine had been developed, or vaccines had been developed. The UK started its vaccination program towards the end of December 2020. There was hope on the horizon. And there was a very fast start to the economic recovery here in January. Export volumes went up, especially in tech. Everything was looking very positive for the year. We had forecast, again, GDP of 7.1%. Then around, just before Tet, I think it was, there was a small outbreak in one of the northern provinces, so HSBC reduced its GDP forecast for Vietnam to 6.6%. Then after Tet, there was an even bigger outbreak, and we reduced it to 5.5%. And then gradually that outbreak that started in the north started to filter down Da Nang and also here in the heartland of the economy around Ho Chi Minh, and so we reduced it to 5.1%. But the one thing we hadn't counted on, the authorities hadn't counted on, was Delta. I'm not a doctor, but all indications are that the Delta variant is between 7 and 8 times more transmissible than the previous ones, which meant it was much, much harder to contain, and it made it much, much harder for the Vietnamese authorities to do the track and trace, because once you get above a certain number of people, it's very difficult to do that. And so the 4th wave of COVID hit, and it hit Vietnam, and in fact hit Asia very, very hard. It started in the industrial parks in Bac Giang, Bac Ninh in the north, but very quickly the country was getting up to sort of 18,000 cases per day. And as a result of that, Ho Chi Minh also went into lockdown. And here's a picture out of my office. Now, this street, you probably all know, is normally full of motorbikes and noise and cars. Literally, Ho Chi Minh turned very quickly into a ghost town. And here you see on this slide what that lockdown means. And this is a slide on mobility. So if you look at the red line, that represents Vietnam. And the way HSBC, 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 live and where you're using your credit card to spend. So we take these two bits of data and you can see that mobility plunged in Vietnam by over 60%. In Ho Chi Minh City, it plunged by over 90%. So that had a knock-on effect to the economy. The economy started to go into free fall and free fall very quickly, to the point where GDP in the third quarter was negative 6.17%. This is the lowest or worst performing quarter since records started in Vietnam. And bear in mind that we got to minus 6.17% from a target of originally plus 7%. So from January to third quarter, performance was down 15%. The economy of Ho Chi Minh and the surrounding areas fell, according to our records, by about 22 to 24%, and industrial production fell by 45%. So literally a cardiac arrest of the economy, especially here in the South. Year to date, third quarter GDP was 1.4%. HSBC is a very conservative organization. Our estimates are that we'll finish the year at 2%. I think the government expects 2.5%, but we're seeing some pain points in supply chains, workers coming back to factories. We just don't think we're going to get that big pickup, certainly not in the fourth quarter. But either way, Vietnam will still have positive GDP growth, which I think is a positive outcome given the immense challenges that the country has faced. So let's try and look forward. If I look into my crystal ball and I polish it off and I actually then speak to my economic global research team in Hong Kong, HSBC's house view is 6.8% GDP growth in 2022. So we're getting back to where Vietnam was 2019 pre-COVID. This is good news. And there is other good news out there as well. We finally have an exit strategy for COVID. It's called vaccinations. And what started off as a real challenge for Vietnam was getting access to the vaccine. And that wasn't just Vietnam, that was a lot of emerging and frontier markets because the vaccines were being prioritized for markets like North America and continental Europe. So if you look at this slide, and this slide was taken in June, you will see that Vietnam was right at the bottom across Asia next to Bangladesh for vaccinations. So at the end of June, 6.7 million people had been single vaccinated. And you compare that to Singapore at the time, roughly 74%. Now, Singapore has a much smaller population. This is where we were. And the big concern for Vietnam at the time was, can they get the vaccines quickly enough and then execute and get them into people's arms to ensure that the economy can start picking up? As a foreigner living in Vietnam, I know that there's nothing the Vietnamese like more than a challenge, because when Vietnam puts its mind to something, it invariably achieves it. And if you look at these numbers, and these numbers were 2 weeks ago, you'll see that Vietnam has now overtaken Thailand, Hong Kong, India, Indonesia, Philippines, and Bangladesh, and is now ahead of Hong Kong. The important thing on this slide is the gray square is double vaccination. The red one is first. Hong Kong is stuck at 61.6. It's not doing any more first vaccines. This is why Hong Kong is still shut. If you want to go to Hong Kong, it's 3 weeks in quarantine, 1 week at home. It's having a disastrous impact on Hong Kong. And China has done 87.8. But there's real concern in China, and I'm not a doctor, but indications are that potentially their vaccine is not as effective against the Delta variant as some of the others, and therefore opening the economy and allowing access could be problematic to them. So if we look at this, it shows that Vietnam should hit 70% vaccination by the end of this year. My gut feel is that we will hit that number, maybe slightly higher by Tet, which hopefully means that the Vietnamese authorities will be able to allow travel across Vietnam at Tet. The good thing for Vietnam is that receptivity or acceptance of the vaccine is amongst the top 3 in the world. If people have access to the vaccine, they will take it in Vietnam. The big outbreaks that we're now seeing in continental Europe, Germany, Holland, Austria, is because 25 to 30% of the population has refused to take the vaccine. And so the big impact is the unvaccinated are now suffering, and that may have a knock-on effect to economic performance. But all indications are that Vietnam should get to 70% and beyond by Tet next year. And I think that's a very important factor when we look at future economic performance. You'll see here that infection numbers are down across the world, and they're down across Asia. We're starting to see a slow pickup. We're seeing a pickup now in Vietnam. But I think we're at a point where we no longer have to look at how many people are getting COVID. We need to start looking at how many people are ending up in hospital, how many people are ending up in critical care, and how many are actually dying. And because of the vaccine rates, even though we're starting to see a slight pickup, hospitalization rates are down and death rates are down. And you'll see here closer, Vietnam and Thailand. We went through the peak around the same time. Slight pickup in Vietnam that we're starting to see now, and I think, I can't remember the numbers, but sort of 5,000, 6,000, 7,000 cases a day, but the death rate's certainly much lower than what it was before. And this is that global mobility statistic. So we've broken down Vietnam. You'll see gray is Ho Chi Minh City. So Ho Chi Minh City had, by HSBC's indications, the toughest, the hardest lockdown of anywhere in the world. And I have friends who live in Melbourne who are very proud to say, we're the city that had the longest lockdown in the world, 100 days or something. But they were still allowed to play golf, and they could still go out on their bikes, and they could still do grocery shopping, and they could still meet family friends as long as it was 2 people. So it wasn't really a lockdown. But the reality is that we, in Vietnam and in Ho Chi Minh, have gone through the toughest lockdown of anywhere in the world and are bouncing back. So here's a summary of some economic data. PMI indicates confidence. So when you get above 50, you're confident. If you're under 50, you're not confident. If you're under 40, you're depressed, roughly. You'll see here that August, September, confidence was very, very low in the Vietnamese economy. It is now back to above 50, so people are starting to look up. If you look at exports, they shrank in August, they shrank in September, they were flat in October. We're starting to see a pickup in exports. But that is being impacted by a lot of workers are still outside of Ho Chi Minh or the surrounding provinces. So if you take Phu Chen, the Taiwanese shoe manufacturer, and they do Adidas and they do Nike, I think, they are about 60 to 70% short of workers. So whilst they've started production again, they're not up to the volumes that they were doing before. But we're hopeful that we'll see a pickup in export volumes going forward. And you'll see here that manufacturing, IP stands for industrial production, is still in negative territory. We're hoping it gets flat in November and then starts to pick up in December. Same with retail sales. We saw a big precipitous drop. As I said, HSBC has about 330,000 credit cards. The spend in August, September was down nearly 80% of what it was pre-COVID. People were not going out and spending, certainly not a wine and dine category, certainly not health and beauty, certainly not travel. And a lot of the purchasing that took place during the lockdown was done via bank transfer. People did not want to do a credit card transaction. But we're starting to see a gradual resumption of retail sales, which is positive. The good news for Vietnam, and focus on the blue line here, is that FDI continues to be resilient. And you'll see that Vietnam was getting between 9 and 5% of its GDP coming in every year as FDI. It has come down because foreign investors are not going to come and put money into Vietnam if they can't travel. So the travel restrictions have had an impact on this. And that's why you can see Malaysia has just overtaken Vietnam. But despite all the challenges that Vietnam has had and not allowing access to the country because of travel, it was still around 5 to 6% of GDP. Our view is that that will pick back up once Vietnam opens back to 8, 9, 10, 11% of GDP. So that is a real positive driver for the Vietnamese economy. Here you will see two lines. The red line is FDI. So globally, FDI is down. But if you look at the black line, that's Asia. So it's still growing in Asia. And Vietnam will be one of the biggest beneficiaries of that FDI. And the FDI that tends to come into Vietnam, around 80 to 90% of it is manufacturing. which will continue to drive the export story of Vietnam. And Vietnam has done a very good job at moving the composition of its economy. It has gone up the value chain. So here you will see that Vietnam now is a major phone and computer electronics exporter. The margins, the CFOs, you'll understand this, the margins on that business are much higher. So it's much better for the country. Yes, footwear and textiles are important, but those businesses tend to operate on a margin of around 8 to 10%. You look at the electronic sector, they're operating on a margin of 40 to 50%. It's much more important for the country to move up. And we're seeing a lot of investment coming in. Taiwanese companies, Foxconn, I mean, Samsung's already here, LG, Gore-Tex, etc., Luxshare, coming in. This is the real story for Vietnam. Vietnam has done a really good job of going up the value chain. I used to cover 12 countries in Asia, one of which was Bangladesh. They are in many ways a one-trick pony. It is all about garments. And the only way they can continue to be competitive is to be the cheapest. And it's very difficult to have your strategy where your objective is always to be the cheapest. So Vietnam's done a very good job. Yes, they still export $29, $30 billion of garments. And it's still an important employer in the economy. But Vietnam has used that to move up the value chain, which I think is very, very important for the future of this economy. So there's a couple of big questions. The first one is around inflation. What is happening to inflation? We sometimes hear people say it's transitory, there's a spike in prices, it's caused because there's bottlenecks in supply chain, we can't get enough workers, therefore it'll pass. There are other views that this is meaningful inflation. We're seeing a rise in energy prices, and we're seeing a rise in food prices. And there's two schools of thoughts. If it's transitory, it'll gradually lapse and we'll go back to a more normal environment. If it's more permanent, then central banks at some stage will have to raise interest rates. And the view is if they raise interest rates too soon, will it cause the economies to slow down? Right now, HSBC's house view is that it's predominantly transitory and that there may be rate rises in the second half of next year, but it'll be one rate rise from the US Fed. But I think this is a very important number to look at. If inflation does pick up and is real, genuine long-term inflation, we will see interest rates going up around the world. The second one is tourism. As we said, a very important driver to the economy here. And by the way, that's not me. This is just a photo that my team put together. But $33 billion is a huge contribution to the Vietnamese economy. The Vietnamese economy is $305 billion roughly. The big question mark around tourism, and I know they've opened, I think, 5 areas, is do we get a material uplift? And the other question is Chinese tourists. Chinese tourists are, I think, 35% of all tourist arrivals into Vietnam. We do not see a situation where China will start actively traveling, because no one goes on holiday for 2 weeks to then go and spend 3 weeks in quarantine on the way home. So the big question mark is, I think tourism does start to kick off next year. It doesn't get back to where it was before because Chinese tourist arrivals won't be there. But yes, Korea, Taiwan, Japan, Europe, we should see some sort of return. The other big question is what happens to the Chinese economy? If there is an outbreak of COVID in China and their vaccine is not as effective as the others, what does that mean economically? And you'll see here Vietnam, the red line shows for every 1% of economic growth in China, Vietnam gets 0.5% of GDP growth. So Vietnam and the Chinese economy are very closely linked. Not as close as the Korean, so for every 1% of economic growth in China, you get 75 or 0.75% of growth in Korea, but Vietnam is still very closely linked to China. So to see how the Vietnamese economy will perform next year, we have to keep a very close eye on what happens to China. The good thing is that Vietnam, the gray line is how important the US economy is, and the black one is for the European Union. Vietnam is so internationally connected now that any improvements in those have a knock-on effect to the economy here. But there are many positives. The first is Vietnam sits on over $100 billion of foreign exchange reserves. The second is you have a stable currency. Now, there is a view that next year trade volumes will come down across the world as consumers in the West stop buying goods and start spending more on services. So that may put a little bit of pressure on the Vietnamese dong to be depreciated. I don't think the authorities do it. There's been some tension between Vietnam and the US on the fact that the US perceives Vietnam to manipulate its currency. And as a result, the Central Bank and Ministry of Finance have allowed a very minor appreciation of Vietnam dong. So I think even if we see a reduction in trade volumes next year, the Vietnamese dong should trade in roughly the area where it is at the moment. And that's very positive for foreign direct investors, that you have a stable currency. The next one is stable government. Vietnam has a very consistent approach, whether it was Prime Minister Phuc or now Prime Minister Chin. The government has a very consistent approach when it comes to engagement with the outside world, getting Vietnam to be part of the global supply chain. It has signed 16 free trade agreements. So it's just done the European Union, it's done UK most recently. These are very positive for Vietnam going forward. I think the biggest positive is the Vietnamese. There's something about the Vietnamese that, as I said before, if there's a challenge, they will rise to it. I'm fortunate enough to lead a team of very, very young Vietnamese. They all believe that tomorrow will be better than today. And so I generally believe that their resilience, which we've seen through this crisis, the desire to learn, the desire to compete, the desire to improve is there. I feel very positive that actually that is an area of competitive advantage for this country. So I think we see liftoff next year. I'm hopeful. Reason for that is my CFO has given me some very interesting targets for next year. So we're giving our team some very interesting targets. So we're hopeful next year, 6.8% GDP growth. We see a resumption of tourism and we get back to a little bit more normalized environment. So I just need to finish with one slide, which is a disclaimer. It's in very small font, but basically what it says, it's done to keep my compliance and legal team happy. I cannot be held accountable for anything I've said today, by the way, so thank you very much.